Here's the first take on the index, up about 30 odd points, so that's not bad actually. A very good start for the mid-caps, by the way.
It's a very good-looking screen in the broader markets. The mid-cap index, small-cap index, all of them surging.
For the markets, they've come off sharply from the highs. The Nifty is down 40 points or 45 points from the day's high.
It's a good-looking screen, whether India or Bharat. The point is that mid-caps are flying away and there's money being made in this market.
The Nifty is going to end at 19,581, a neat 50-point up move. The Sensex higher by close to about 100 points. Mid-caps continue. 40,000 is the level scaled by the mid-cap index, and the small-cap index moving in step.
Hello and welcome to Markets Today, the show where we track about 6 hours of the day's trading action in 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. Sensex and Nifty end with minor gains, but there's no stopping the mid-cap rally. The mid-cap index gains over 400 points to hit a record high. The race for Cipla heats up. Torrent Farmers likely to have made a non-binding bid. Private equity interest remains strong now. Economic Times reports Dr. Reddy's could team up with Bain Capital and throw its hat into the ring. Power stocks take a breather after a strong run-up, but strong power demand prompts the ministry to recommend blending of imported coal to keep thermal capacities running at full throttle. Nazara Technologies gains ahead of a board meet to consider a preferential issue. This comes a day after a preferential issue to Zerodha founder Nikhil Kamath. Raymond jumps after past concerns are allayed in investor meets. Jubilant Food and Indian Railway Finance Corp also gain in trade. Nifty Metal Index closes at record high as metal stocks see mixed close on dollar surge. In the global commodity market, base metal prices are supported by China. Iron ore surges to a one-month high. Okay, those are the top headlines. We'll discuss them in greater detail, but first up, a wrap of the day's market action. Sensex and Nifty closed mildly in the green, gaining 0.25%. Mid-caps continue to outperform, scaling new peaks yet again. That index ended above 40,000 for the first time. However, financials failed to hold gains and ended mildly lower. Surbhi Upadhyay is here with the details. Surbhi.
Well, it was a quiet day on the street with the large caps being fairly range-bound, but it was mid-caps flying once again. The net result, the Nifty was in about a 60-point band. It managed to have incremental gains and closed below the 19,600 level, so it keeps inching higher. But the real story, as I keep saying, is in mid-caps, and I'll come to that in just a bit. First, on the large cap screen, what was taking the market higher? Really, it was more about pharmaceuticals, healthcare today, and FMCG, so slightly defensive in nature in that context. You have stocks like Apollo Hospitals leading the charts with a 3% up move on the Nifty, Sun Pharma, ITC, Titan, Nestle. These were the stocks that had the bulk of the gains coming in on the index. Other Nifty gainers included Coal India. That's a stock in sharp focus as we keep hearing about this solid peak power demand touching 240 gigawatts on the 1st of September. So coal supplies and therefore Coal India is in sharp focus. That stock was higher. BPCL, Infosys and L&T were some of the other key names that added to the bulls tally. Large cap banks continue to underperform, and that's been a trend that simply refuses to change. So we had some profit taking continuing over there, and some of the auto stocks which have had a good run in the recent past, they were also coming under a bit of pressure. So on the banking side, HDFC Bank, SBI; on the auto side, Maruti, M&M, Eicher Motors. These were the stocks that were on the red side of the screen. Now let's talk about the real headline, and that is mid-cap. There is simply no stopping mid-caps and small-caps in the market across sectors, across sort of different categorization of stocks. Raymond, for instance, can be really termed the mid-cap stock of the day. Brokerages getting very excited, writing positive commentary on the stock about the turnaround story and the listing of its different businesses. That stock closed up almost 10-11% higher. You had names like some of the QSR, quick service restaurant names, getting excited as we start talking about the World Cup team. Maybe that was a rub-off impact, but Devyani International, Jubilant Foodworks, Solid Smart, 4 to 5% gains on these names as well. And then there is no stopping the PSU run, is there? IRFC, another 7% today. NBCC, it's a long list. In fact, when I talk about PSUs, let's not forget PSU banks, because while large cap banks are being very subdued, names like Central Bank of India, IDBI Bank, UCO Bank, they were flying around 5, 6, 7%. Now, what happens from here on? You have to realize that the global markets have been slightly cautious. We need to see if this enthusiasm and euphoria following all of the Chinese moves on the stimulus side, the deposit rate cuts that we've seen from Chinese banks, whether that can continue, because the Hong Kong market, for instance, was under pressure today. We also have the US coming back from the Labor Day holiday, so we'll get more cues and clues from there. US yields have been inching higher. That will be a key watch point when we come back to trade tomorrow.
Oh, it'll be. Global market is well important to track. Thank you, Subhi, for joining us with all those updates. Let's get you some market opinion. Dheeraj Agrawal, Managing Director at Ambit Investment Managers, believes mid-cap banks and NBFCs still offer value. He also adds that defense, capital goods and railways are seeing strong order wins.
There are a number of mid-cap banks and NBFCs at this point of time which have underperformed the market in the last few months and offer value. Even for some more time to come, I think Axis and ICICI could end up outperforming the other two. A number of spaces are doing well, as you rightly said. Capital goods, there are orders coming in. Infrastructure, railways, orders coming in. Defense is doing well. There are a few spaces like that. So select automobiles. I mean, I've been very positive on automobiles for a while. We've talked about this every time. And automobiles, I continue with Tata Motors, Eicher, TVS. So same names. Few of them have consolidated for a while. Eicher has consolidated post the Harley-Davidson news.
Okay, that is an expert opinion coming in. Moving on to the second headline now. There may be a new contender in the race for Cipla. Remember, CNBC-TV18 first broke the story that the promoters were looking to sell their stake. Now, Economic Times report indicates that PE firm Bain has approached Dr. Reddy's to explore a joint bid to buy out promoters of Cipla. Ekta Batra has more details on this one. Ekta.
An Economic Times report indicates PE firm Bain has approached Dr. Reddy's to explore a joint bid for Cipla's promoter stake. Dr. Reddy's issued a clarification to the exchanges. In reaction to this story, Dr. Reddy's has said that the company does not comment on market speculation and there is currently no such event or information which requires a disclosure under Regulation 30 of the SEBI listing regulations. The other contenders in the fray for Cipla include PE firm Blackstone and pharma company Torrent Pharma. A CNBC-TV18 exclusive had indicated that Torrent Pharma has signed a non-binding bid. According to a Business Standard report, Torrent is expected to be leading the race with a 30% higher bid than Blackstone. So what does Cipla, with a ticket size of around 60,000 odd crores, including an open offer at current market price, bring to the table for pharma companies such as Torrent and Dr. Reddy's? To start with, both companies will be catapulted to top of the leaderboard in the Indian pharma space if either of them acquires Cipla. Both companies are likely to keep Cipla intact, unlike PE firms who are likely to spin off the businesses to unlock meaningful value, say analysts. Now, for Torrent Pharma in particular, whose market cap is close to 40% lower than Cipla, the complementary portfolio in India, for example, acute drugs, trade generics and consumer health, would be key positives. Both companies have just about around a 5% overlap in their India portfolio, which is manageable according to analysts. Torrent would also get a larger footing in the US market, where Cipla is currently 5 times bigger than Torrent. Bernstein says the combined P&L will help in bolder investments in biosimilars, specialty in the US and consumer health in India. The fear is that Torrent Pharma promoters could need to dilute 20 to 25% stake to fund the deal and take on significant debt. BofA points out, assuming Torrent has to take on $4 billion of incremental debt to fund the deal, the net debt to EBITDA would rise to over 4 times. However, the likes of Bernstein, who also examined the pros and cons of the deal with Torrent and Blackstone, said both Torrent and Cipla are cash-generating businesses and large debt should not raise eyebrows. Also, analysts say what might work in Torrent's favor is the company's experience with integrating acquisitions in India, such as Elder, Unichem and Curatio, though they have been smaller in size and their high promoter holding. For Dr. Reddy's, whose market cap is just about 5% less than Cipla's, the India business is expected to be one of the key lures for Dr. Reddy's. Currently, Cipla is ranked 3rd, has 5% market share and 20 plus brands in the top 300 in India. Dr. Reddy's has around 16 brands in the top 300, ranked 12th and 3% market share. A combined entity will help propel Dr. Reddy's to become one of the top 5 drug makers in the country, a long-time aspiration for the company. As for Dr. Reddy's, a deterrent is, unlike Torrent, Dr. Reddy's has low promoter holding at 26.7%. The combined net cash on books of both Cipla and Dr. Reddy's is currently around 10,000 crores and could improve further with Revlimid generic sales. But despite high cash, Dr. Reddy's would probably still have to take on debt of up to even $5 billion according to some estimates. High leverage along with integrating large businesses across India and US could be key hurdles for Dr. Reddy's, making Torrent a possible better fit according to experts.
Ekta, that's an interesting analysis. Thank you so much for joining us with all those details. So this is an interesting update that we'll be getting you as and when there is more progress in this one. Moving on to the third headline now. Power stocks took a breather after strong run-up. Stocks like Adani Power, Tata Power and Power Grid ended 0.25% lower, but strong power demand prompts the ministry to recommend blending of imported coal to keep thermal capacities running at full throttle. Separately, Coal India rallied over 3% after Nuvama bet big on the stock. Nigel D'Souza is here with the details. Nigel.
Well, that's right. Coal India did well in today's trading session, and Nuvama, they continue to remain positive on the stock. They have a buy rating, target price of around 361. They're saying the stock is cheap at around 2.5 times EV upon EBITDA. They broadly highlighted three big factors. So let's get to that. They're highlighting that the offtake till date, in this fiscal year is up by 7.9%. That's what puts to rest any kind of volume growth concerns. And they're also saying since volumes are growing, operating leverage will play out. Next up, thermal power generation is set to increase to meet power demand. Now that, in fact, obviously will give rise to some kind of demand for coal as well. And that's why they're working with volume growth for this year of around 7%. And finally, they're saying e-auction prices, they seem to have bottomed out at around 54% premium in June 2023. As of the last month, it moved back closer to around 80%. Though they're saying for the year, the e-auction average prices will be lower than what we saw in the first quarter. But they're saying, for the timing at least, they believe that e-auction prices have bottomed out. Put all this together, Nuvama is positive on the stock.
Okay, all right. Thank you so much for joining us with those details. In fact, India's power demand hit a record high of 240 gigawatts at the beginning of this month. This surge in demand comes at a time when India is grappling with deficient rains. My colleague Abhimanyu Sharma spoke to Union Power Minister R.K. Singh on the power demand trends and steps taken by the ministry. Listen in.
Power demand in August has grown by nearly 20-21%. Now that is humongous, that is huge. No other large country has seen this huge growth. And in July it grew by almost 10%. And then on top of that 21%. So it's huge. On a daily basis, my demand is 40 to 50,000 megawatts more than the previous year. So our peak demand has touched 241,000 megawatts. Now, the Ministry of Coal has expanded its coal production, but the pace at which the demand is growing is simply stupendous. That is a good thing. It shows that our economy is growing rapidly because power consumption is an indicator of growth. So the coal ministry has ramped up its production, but still there's a gap between the coal arrivals at the power plants and the consumption. So we've said that you continue imports for blending. So that will continue. Because we are very clear in our mind. There's not going to be load shedding. Whatever power requirement is there for meeting our requirements, that power will be made. Well, I mean, that is an issue on which we are not going to compromise.
Okay, power demand peaks in September. That's the word coming in from the Union Power Minister. Time for a break now, but stay tuned. We'll be back in a bit with all the other headlines that we are tracking. Welcome back. You're still tuned into Markets Today on CNBC-TV18, and let's take you to the rest of the headlines that we are tracking for you. To the fourth headline now. Nazara Tech rallied over 7% ahead of a board meet to consider a preferential issue. This comes a day after a preferential issue to Zerodha founder Nikhil Kamath. The stock has gained over 15% in the last two trading sessions itself. Reema Tendulkar joins in with more details. Reema.
Thanks so much for that. So Nazara Tech is surging for the second day in a row. The company has announced that on 7th of September, that's Thursday, the board will be meeting to consider and issue a preferential shares to more investors. Now remember, this is over and above the 100 crore that the company raised yesterday by issuing 14 lakh shares to the Kamath brothers, Nikhil Kamath and his firms. The company has an enabling resolution to raise up to 750 crore rupees. Of that, the company raised 100 crores via the pref issue to Nikhil Kamath and his entities. They still have the headroom to raise up to 650 crore rupees. And now we understand that on 6th of September, that's on Thursday, the company will be looking to raise some more money via this pref issue. The endorsement by, Nikhil Kamath, has been a big boost to Nazara Technology, which is why the stock has been surging. In fact, in an interview to us, Nikhil Kamath said he's very bullish on the gaming industry in India over the next next decade. Nazara Tech, is a very well-run company. Its revenue growth last year was 75%. Its margins were 10%. And for, Nazara Tech per se, they're looking to raise this money because they do have a lot of acquisitions and partnerships in their pipeline to grow their business organically and inorganically, so which is why they've been on the prowl to raise some money.
Okay, all right. Thank you, Rima, for making sense of the move that we've been seeing in Nazara Technologies. Moving on, retail and QSR stocks, they rallied ahead of G20 and the World Cup. Jubilant Food was the top gainer. Mangnam Mal is joining in with what's aiding the rally. Mangnam 6% higher on Jubilant Foodworks.
Well, a bunch of reasons why Jubilant Foodworks could be moving higher in today's trading session. So I tried to narrow it down to a couple of them that look most intuitive to me. The first one, of course, is that we're ending Shravan, and this Shravan was a long one because there was Adhik Maas as well. So not a lot of people would consume a lot of meat during these periods. So now that this ends, the belief is that maybe there will be higher ordering as well. And just as there was a discussion on the World Cup squad for India. We're about a month away from the ODI Cricket World Cup. And what usually happens in these sporting events is that people feel hungry while watching the games as well, and they tend to order more pizza. So that is another reason for people to believe that maybe sales would look good, especially in the quarter after the second quarter. But finally, we're also looking at some moderation in dairy and cheese prices as the flush season is underway, and that would support costs for the company as well. The most important reason, according to me, however, is the underperformance of the stock. We've been talking about the Midcap index hitting a fresh record high on a daily basis, right? This year itself, the Midcap index is up 28%. Compared to that, including today's move, Jubilant Foodworks is up just around 5%. And why is the Midcap index? If you just take a look at the entire QSR space, Jubilant Foodworks has been a big underperformer. Restaurant Brands is up 7%. Sapphire, Devyani, Westlife has been a big outperformer with a gain of 21% itself. And the Q1 results weren't particularly bad. The management said that they are focusing on the loyalty program, value offering in terms of 49 and 99 rupee price points and quicker delivery. They've also looked at revamping their dine-in experience, and margins, they did say after their first quarter, should at least stay stable or improve from here on itself. For all of this underperformance, the stock at one point, which was trading upwards of 75 times 2-year forward earnings, is trading just around 54 times. Not particularly cheap, but definitely a lot cheaper than what it was in the past.
Okay, that's what's happening with Jubilant Foodworks. Thank you so much for making sense of the move that we saw today, Mangala. Moving on to the fifth headline now. The Nifty Metal Index closed at a record high. Stocks like Kalyani Steel, JSW Steel, Jindal Steel and Power, Hindustan Zinc all gain in trade. However, some names closed in the red. This was due to a dollar surge. Manisha Gupta joins in with what's aiding metals. Manisha.
It has been a good day for metals, where we saw most of them trading 1 to 2% on the higher side. This is supported by the China efforts, which has been releasing smaller but various stimulus measures. To start with, they have cut down the payment ratio for the first-time home buyers. It also has adjusted the interest rates for existing mortgages. There have been some tax rebates as well. It also has been about launching some financial inclusions, bonds, etc. And that really seems to be supporting consumer buying, and especially into real estate, and that has led to the metal prices trading higher. The US Fed may not hike interest rates in the month of September when they meet on 19th and 20th of September, also has been aiding buying here. And then the improvement in automobile sector in Europe has led to some metals in trading in premium within that part of the world also. There are tight supplies in any case in copper, and this is a metal that is a top favorite with brokers and banks as well. And we have seen the best of returns actually come in on an year-on-year basis in case of copper prices. The other one that has been doing quite well is iron ore. That one is trading at a 1-month highs as well. If you look at a month-on-month and YTD basis, many of these metals now seem to be giving up their losses, turning into some gains. The markets do believe that if the Chinese stimulus measures continue to keep coming the way they are, then we might be in for a strong rally in case of metal prices. Until then, the bottom perhaps has been made, and the metals might continue to consolidate or see gradual increases from here.
Okay, Nifty Metal at record high. That explains the rally today. Manisha, thank you so much for bringing us that perspective. And with that, it's a wrap on this edition of Markets Today. Stay tuned for more news and updates.